RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief free show. I guess this is our public show. Today, of course, is sure would like to try and get my act together and start these things on time for you. Sorry if you're sitting there waiting at 9 o'clock wondering where we were. So anyway, I suppose it is a sign of the current market state. I've noticed things are awfully weird in the world right now. Anyway, sort of rhetoric, I suppose. 28th of May, so coming into the very end of May, I guess get ready for your summer. Make sure, hopefully, the volume here is agreeable for all of you. I suppose I can adjust the microphone a little bit more, but we've been having those volume issues lately. I think we got it licked. We'll see. Chris helped me out over the weekend. Anyway, so 7 minutes past the top of the hour. Sorry for our tardiness once again. Tuesdays usually is our CTO day. Maybe I'm putting too much pressure on him. I don't know. Did hear that he actually hurt his back over the weekend, so we sent Sjord to bed with a whole bunch of back meds. And everybody give best wishes to speedy recovery for Mr. Sjord, and hopefully we'll have him back on the call here relatively soon. Not really seeing a hell of a lot. Ironically enough, it's I suppose this might be one of these sort of nifty 50 scenarios. Back in the late 40s through the 1950s, really the whole damn decade, there was just a very select few stocks that just kept going and going and going and driving the indexes higher and higher and higher. Broader economy didn't really do that great, but eventually it was sort of dragged higher into its cycle peak, which was the early 1960s. And I get the impression that we're in the similar type scenario. The news out today, not really market friendly. This is one of these situations where it's kind of like what's good for Main Street is probably not so good for Wall Street. So as you can see, the headline here this morning, U.S. house prices rise the most in 17 months. Actually, it's been an interesting reprieve seeing house prices sort of calm down down in the States, but I think those days are numbered. And if anything, sadly, in this great reset, it's not really like the houses are being better built or better quality. This is just a continual conversation about the erosion of the purchasing power of the currency, and there is no end to this. Sadly, the end is we all officially switch to Bitcoins. The government probably seizes them, kind of like what they did with the gold market in the 1930s. And they officially reset the currency, probably roll it back like 100 to 1 or something. And then they start the whole new Fugazi all over again. Exactly what date that happens, anybody's guess. So, are houses that much more valuable? No, not really. Is inflation going away? No. I mean, what's even bothersome now is nobody's actually talking about sort of resetting the prices back to even just pre-COVID level. They're just talking about, well, you know what? We'd like the pace of increase to slow down. So really, I don't see any change to this. And as I said before, if anything, I'd almost prefer that they stop lying to the public with this stupid term called inflation and really call it what it is, the debasement of the currency. And You just look at your local governments and you see the deficits that they're running, and nobody gave them permission to run these deficits. And if nobody gave them permission to run the deficits, is anybody going to stand in front of them to stop the deficits? You know the answer to that. So, welcome to our new reality. So, anyway, buy Bitcoin. It is an interesting sort of dichotomy that's going on here, though, because as you can see, and I think we're probably going to see this more and more over time, where you have sort of the this generation's Nifty 50s dramatically outperforming. So, you actually look at the broader stock market. The stock market does not like what it sees here. In China to inflationary pressures, and our federal government is even worse than Mr. Biden down in the States. So don't look for China for like demonstration of best practices. If anything, it's much worse. And of course, you all know what I think about the great China D's experiment going on here with Mr. Toilet Water. It is interesting to see that these young upstart Fed governors, and this guy isn't even really a bankster. I think he was on like the Federal Communications Commission before he got this job. Just goes to show, yeah, I mean, my rants about politicians and what they've set us up here. I don't even think it'd actually be interesting to see how many Fed governors are actually like career banksters versus lawyers and bureaucrats and stuff that really don't have any idea what the hell they're doing. They've just been told, look at, we're going through the Great Reset, somehow convince the public not to revolt as we go through destroying their lives. Anyway. So as I said, a little bit of a disconnect. If we actually look at the broader market, it makes sense. Wall Street's kind of like, oh, you're gonna raise interest rates again? Come on, you're killing me. Actually, that's an interesting image. What is that? Where is that? Oh, that was a video. I was wondering what that was. That's a video of a house in Portugal I was looking at over the weekend. Although I tell you, your money doesn't buy a hell of a lot in Portugal these days. I don't think the incredible deals that I was once interested in still exist. All right, back to the market. So here's your funny situation. Actually, interesting to see the S&Ps. They've dragged them back up into positive territory. But as I had said, most of the broader market, especially like old brick and mortar economy, they're not happy at all. And then there's this one clown over here, semiconductors, that of course they're just having a great old time right now. It's interesting. I heard that Mr. Druckenmiller exited his NVIDIA trade. So he's always very, very good at sort of sliding in way before everybody else and then sliding out before everybody else. I don't know whether it makes sense to chase a name like NVIDIA here. I think it's like over $1,100 a share right now, which is just absolutely insane. What's even more insane, and this is a sales pitch for why you really want to hang out at TRI, is our CTO, Sjord. Unfortunately, he's under the weather today, so we won't have him in the after party today, which is kind of a bummer. But get well soon, Sjord. But he was interested in NVIDIA at like $25 a share. Ay, caramba. So anyway, it is what it is. So brick and mortar, and as you can see, brick and mortar, not really very happy today. And you read the headlines. The headlines are, the stock market's kind of hoping that maybe we get lower interest rates, and the data coming out is anything but talking about lower interest rates. What is I do find fascinating about what's going on in the market here, though, right now, is it does feel as though there's like a how would you call this? A regional disconnect. So you notice that Dallas and the Texas economy, it's not happy at all. But I get the feeling that, especially through that whole housing nonsense bubble that we saw, where Austin, Texas, of all places, was seeing a real estate boom, It was a little bit suspect, if you ask me. But anyway, there is your housing number. That's a huge print there. And you can see it's just grinding higher year over year, 7.5% increase. There's no way in hell you're going to have lower short term interest rates in the face of that. That's just insane. And even month over month, they're ticking up. Now, what I would say, just try to put this into perspective. Seasonally, this is the absolute strongest part of the year for things like the housing industry. They call it like the spring market. A lot of people want to move and buy new houses and stuff in the spring. So we'll see if there's traction here going forward. What I did find interesting, which is a little bit surprising, but I suppose it isn't, is today we also had China D's inflation numbers from our PPI. So, not exactly the same. But you can see raw material prices, dramatic increase for the China D's, and PPIs coming in higher than expected. So, and you can even see PPI year over year, I mean, dramatically higher than expected. So I don't see how the China D's can lower interest rates. There is no justification for lower interest rates here from an inflation perspective. So if the China D's do decide to go and lower interest rates, it's purely a function of them, trying to save this housing bubble, and trying to sort of prop up a consumer that's really, really overextended, which unfortunately is going to lead to even more inflationary pressures. So I don't think cutting interest rates is any solution for the China D's. It's a shit show in this country, and it's not getting any better. It's just kind of disappointing. These are tough times that we're living in here, folks. I ain't gonna sugarcoat it. And like you saw that Benjamin Cohen's, I don't know whether it was a tweet, but I did see a lot of people posting it, showing sort of the social media activity in the crypto space. I think it's the same in the stock market as well, folks. Especially, considering so many millennials bought into Alan's bullshit. And where is Alan? You can't even see Alan on here anymore. So many millennials are all loaded up with Alan, and they are probably dying 1,000 deaths. Where the hell is Alan on this thing? Isn't that bizarre? Let's see if I zoom in, maybe we can find him. Oh, there he is. So you can see his box has shrunk appreciably over the past 6-8 months, and I don't see really any change here. So I would imagine a lot of up and coming baby boomers. Well, no, baby boomers, they're old. Forget about them; they're done. But things like the I guess the millennials and the Gen X's and I guess Z's, I guess all those. Anybody, I guess Gen Z would probably be too young to invest in the stock market, but definitely millennials. They bought into Allen hook, line, and sinker, and I bet you they're dying 1,000 deaths here. And the interesting thing is actually, if you look at things like the Russell 2000, which is sort of the broader economy, broader stock market, actually interesting. It is holding desperately onto a small gain here. But actually, I don't know whether we can show you this, but the Russell 2000, that would be IWM. I think the ETF, well, I guess it's not bad. It's been bumping along basically this level here since 2000, again, it's the end of the year. So it's not really going anywhere, just kind of bumping along sideways. NASDAQ, of course, is just continuing to surge to new highs, along with NVIDIA and the semiconductors and all that. So definitely a disconnect. I suppose the good thing, though, is that, especially considering how crypto oriented this audience is, this bodes well for crypto. I mean, I think we're still in sort of the correction part of the market. We had, I mean, this has been kind of an ongoing funny little story of mine, taking short shots against these highs. taking some profits, getting stopped on trailing positions on moves back up top, then reestablishing new shorts. I would ideally like to have gotten basically this was my short level off of this level here. And they even tagged good old Mountain Man level there through the weekend. But I was too slow on the trigger to have that trade. Actually, on Bitcoin here, you can see 2.618 up top here. Never did get there, but came close, eh? So we've got the fractal short working, which is this big daily signal here. Remember, we had said there was just a ton of reasons to look for a top there. I guess the market that I'm bummed most about is this damn Ethereum. Pissed me off. I took a short shot against that high there. They went, and in very typical holiday session yesterday, and then we went after the stops. The banksters manipulating the market. They went up. They took out my stop there just by a hair, and then dumped it back down. And what was fascinating about this is this, I think, is one of Mr. ICT kind of concept setups, which means you should short that 61.8. And look how they rallied it right back up into that window and then took it back down. I may just get totally left in the dust. You can see I have my sell order working here, but I was too slow. I think I got it working like right here. And I missed that entry like a doofus. So no, thank you, sir. The broader crypto picture, especially if we look at things like the total, I think you get a pretty good idea what's going to happen here if we go and M out here. You can see the fight is on. There's no doubt about it. The original shorts, this kind of 2-to-1s, all those kind of profit objectives, they're still working, and their stops would be up top here. But if we fire this new M top right off of this trend line, then I think we're back in the soup, and we'll see how low we go. And if anything, I think probably what we'll do is Tuesday's usually crypto day around TRI. So I think what we'll do is maybe in the after party, since we don't have Sjord, today, maybe we'll take a look at some of these ETFs for things like Bitcoin, and how did this, options expiry play out? Maybe take a look at some crypto stocks. And then I have to actually head off and teach a class here this morning, so it won't be that long of a session for the after party. The only other thing that I would probably mention before we head on out, Bitcoin futures. They actually left a gap here through that holiday session. Fascinating how I'd even, I was in this beautiful trade. I euchred myself out of the trade by moving my stop, which I suppose hindsight 2020, I should have left it alone. It was interesting how they basically brought the market right back through that holiday session, right into that same level. And I'd even written right here, we'll work short orders in this area on counter trend rallies. We had 4.669s, 2.618s into reload short zones. And what did they do? They didn't even give me any M or anything to work with, just straight up, and then gapped it lower right out of the gate, straight down. You can see I'm having a bit of a challenging market right here, right now. Anyway, I do actually expect that they bring this market back up and fill in this gap. So I'm still going to be watching for the opportunity to get that short back on. And the irony of it all is if this gap, right, the low of this gap, you can see this candle closed at 73.25, and you can see that I got out at 77.20. So it's quite literally going to be just strapping the short position on right at exactly the same level that I put the original, took the original trade off. Knucklehead. So anyway, we'll see how it goes. And then, of course, if this thing does just keep melting down, then we're just going to have to sit in our big honking daily chart setup and just work this short and see where the hell this market takes us. I still like the idea of them taking the market back up top and giving me my cheeky little short trade, 2.618786. Now potentially, actually, this is inaccurate though, because that's a little different. But anyway, that was that A, B, C, D. That's not actually accurate though. So disregard that. But the point is, I would like to try and get this short off here. And as I said, that would basically be on the gap fill up top here. And that's so I'm still holding my breath for that, for whatever it's worth. Having said that, I would imagine bonds not happy with that economic data. That should weigh on the stock market. But what I see happening here, nifty 50 kind of idea, there's just, a few names that are holding the stock market up. You can actually see the Dow looks very, very heavy, but the NASDAQ is trying desperately to buck the overall trend. Interesting how we have actually a double top working on the Russell 2000. And I would imagine that the market at some point is going to look over at the bond market and go, ah, crap, looks like interest rates are going higher. So, there's your market summary for the day. Probably the very easiest tell for you to keep an eye on for what's going to happen here. Keep an eye on this total market cap. And if you see this M fire here, then you know that whatever this counter trend rally is, it's probably done for now. All right, I think we'll leave the rant at that for today. Slow and steady wins the race. Hop on over to the after party. Like I said, we'll talk a little crypto stock. Everybody say a nice little prayer for Sjord and his back. Poor guy. I guess we'll see everybody first thing tomorrow. I don't think we're going to do an after party tomorrow there. We do have a big sort of team marketing meeting that we want to try and get in the books. And it's been awfully difficult to get all these people all around the world all on the same time window. I think we have one set up for tomorrow. We'll see how it goes. So I doubt Sjord's probably going to be back for tomorrow. That might be a little bit early. If anything, maybe he needs to take a bit of a break and just unwind a bit. This might be a bit of a light week with regard to site videos and stuff. So anyway, all right. Have yourselves a great day. See everybody over in the after party. All you people there on the YouTube page. I see now most of you are site members. So let's all head on over to the after party and we'll just carry on the conversation there. All right. Have yourselves a great day. Slow and steady wins the race. PM in for the win. All the best and bye for now.